Did you know a single line in your insurance paperwork could alert the bank that you took over a property subject to and cost you the deal? Let me show you how I've done dozens of subject to deals without getting a single loan called due, and how you can too. Champ, I've been an entrepreneur since ninth grade in high school and a real estate investor since 2006. And all that time, I've never borrowed money from a sticky banker or held a resume job. Today's lesson is about mastering insurance when you're buying real estate, subject to the seller's existing mortgage. If you get this wrong, the bank could be notified and trigger the due on sale clause. But if you do it my way, the way I've tested in the trenches, you can protect your asset and your cash flow. Let's dive in. Now, real quick, I'm not an insurance agent, nor am I giving you legal advice. This is what I've done in real life and what's worked for me. When I first started buying properties subject to, I was nervous. I thought the bank would find out and call the loan due the second they saw my name on anything. So to play it safe, I used a double insurance strategy. Here's what that looked like. Let's say I buy a home from Mr. X. Mr. X has insurance through escrow. What I would do is leave that policy in place, then go out and buy my own insurance policy on that property. Basically, I paid double insurance. Why? Two reasons. 1. Fear. I didn't want the lender to find out. 2. Legal coverage. The seller's policy technically no longer covers the home once they no longer have ownership. If something went wrong, the insurance company might say the policyholder doesn't even own this home anymore and deny the claim. So, I got my own policy. Pro. Decreases the chance the lender notices the change in ownership, since you're not updating the existing policy. Con. You're paying two insurance premiums. If each one is $200 per month, that's $400 per month, which eats into your cash flow fast. Eventually, I got tired of bleeding cash, and I switched to what I call option number 2. Instead of paying for two policies, here's what I started doing. 1. Before or right after closing, I have my insurance company issue a brand new policy. 2. I cancel the seller's existing insurance from escrow. 3. My insurance agent sends the new declaration page, with me listed as the owner, directly to the lender. Yes, this notifies the bank. But I'll be honest with you, champ, I've never had a loan called due. It's possible, but unlikely. More likely than that, getting into a car crash 10 times in the same week. Pro, only one premium to pay, saving you money. You're properly covered as the owner. Con, slightly higher chance the lender gets tipped off because the name on the insurance changes. But let me be clear, subject to does not mean illegal. The due on sale clause is just an option for the bank, not a requirement. If you make the payments, they usually won't care. Even when you're covered, the claim process can suck. I once had a roof go bad on a large property. Cost me $5,000 out of pocket. Took insurance 8 months to pay me a portion of that. Still fighting for the rest. So, always keep reserves. 2. Be ready to self-insure for a bit, especially if you're a buy and hold investor. Don't rely 100% on insurance companies to have your back. This is why I love subject to deals. I didn't use my credit. Nini. I didn't fill out a loan app. I didn't deal with a sticky banker. I didn't pay closing fees. And I still had control over the asset and insurance. Subject to is the most creative, powerful, low-risk way to buy real estate. Especially if you're like me, a refugee, an immigrant, someone who didn't have money or connections. Just hustle and brains. D, if you're just getting started and don't have the cash or confidence for real estate yet, I got you. The new flip is the smartest way to start flipping and make money today. You'll learn negotiation, hustle, and how to spot deals, flipping everyday items like bicycles. It's exactly how I made my first money and built the skills that later made me a subject to ninja. Grab it at thenewflip.com. Feeling stuck? Overwhelmed? Spinning your wheels with no results? You don't need more tactics. You need a mindset reset. That's why I created Reboot, my personal system to rewire your brain for action, momentum, and results. Start your reset at myrealestatedojo.com/reboot. Let's recap the 2 insurance strategies when buying subject to. Option 1, double insurance. Pros, safer from lender detection. Cons, double premium cost. Option 2, cancel and replace. Pros, saves money. Cons, slightly increases lender awareness. Both work, but you've got to pick the one that fits your risk tolerance and cash flow. Always remember you are braver than you believe, stronger than you seem, smarter than you think, and twice as beautiful as you'd ever imagined. Rumi, don't take no for an answer. Much love and peace. Optional final CTA on screen. Free sub to course, myrealestatedojo.com. Then click on Start Now. Books and courses, myrealestatedojo.com. Join the hustler community. www.mrnofluff.com/group.